Yo, what's good, traders? Hopefully you're all having a great weekend. This is going to be a very important video on how you can actually stop trading in no man's land and how you can actually wait for the market to come to you. Also, I do want to apologize. It's been a while since my last video, maybe just a month or a little over a month, and that's just because I've been traveling and I've been working on myself behind the scenes. I think it is important to reflect on yourself to see if there's any weakness in your trading strategy, even if that does mean sacrificing some hobbies and limiting certain entertainment. I think the industry will reward you in the end and you will thank yourself for it. But with that out of the way, let's start dropping some gems. When it comes to any trade, the first thing people should really do, and what I typically like to do, is identify what type of market environment we're in. Right now, like mostly due to the recession and inflation fears, the market sentiment is pretty much bearish. So we're leading to a lot more sell setups over buy setups, and typically this can happen from time to time. Like the sentiment will just shift, and sometimes there'll be a lot more buy setups and sell setups if we're in a bullish market. And then if we're in a bearish market, then typically it would be the reverse. But the second most crucial step is identifying what is price doing. And what I mean by that is typically if we look over here on EU, I would say right now price is nowhere near its prior structure levels. Typically, I made a little illustration. Let's actually go up. Where are you? So this is my little practice illustration before we actually jump into the charts. Right here we've marked up one structure point and two structure points, and as you can see here, price is broken past all of them, and now we're in what I'd like to class as no man's land. And the reason why there is nothing kind of stopping price, there is no structure around price, this is kind of in its own little area. Now when taking trades at this kind of level, there's a higher risk attached, and the reason being is price obviously can't continue in its current state. There's going to be a moment where it's going to catch its breath and it's going to kind of pull back to then continue in its next direction. Now if you do kind of take trades at this area, there's going to be more times, the majority of the time, you're going to go ahead and actually lose a trade, or you're going to be set at break even. I'm going to go into GU because it's a great example. Let me just quickly go on a weekly. So we actually had this multi-year level of support, which kind of got broken recently. Due to the dollar strength. So if we just kind of mark up this level here, as you can see, it's not exactly bang on, but there's multiple touches in and around this area. Ignore COVID spike, I'm not really counting that, but right here price is actually broken below, and then we was in no man's land as there was no structure in this kind of price range. Now if we actually go ahead and box this off and then go down onto the daily and actually look for a trade, alright, we go onto the daily. Alright, let's see if we can actually kind of trade this area. Alright, cool, we closed below the prior low, so now I'm kind of looking for a pullback. Doji candle. This is just a brief trade, I'm not kind of really refining or anything. Alright, this is a stop loss just above structure point. And we're on trade. Let's just do 1600 psych number. Alright, now let's play it out, see what happens. Alright, cool, we got stopped out. So here's a great example, right? Price, I mean, it's a 3R trade, right? You could have probably taken some profit off this, but realistically, what the point of the video is, or what the point of this trade is, you're trading at this level where price is kind of broken down past. Now what you really kind of respect price to kind of do is come up, test into this level, and then continue on its next leg down. However, like I said, you could take trades around this area, but there's just a higher risk attached, so actually just being a little bit more patient and marking up areas of interest, like right here We kind of have a weaker area of interest where there's been a few touches, or we have a stronger area of interest where there's been kind of multiple reactions in and around this area. So we'd be kind of waiting, or we'll set an alert maybe for here, and we'll also set an alert for here. So when price comes into our area, if we do get some kind of reactions and price kind of rejects these areas, we can then go ahead and take trades from here, or we can take trades from here. Now really all we're kind of just doing is we are looking at areas where there has been multiple reactions, and the stronger the reactions the better, because they would just kind of give us more confidence in actually looking for trades. Now we've actually gone ahead and did a little breakdown. We could actually start jumping into the charts and identifying and trying to pick apart some of these areas and trying to identify if price is retested or if we're still in no man's land. So I'm going to start off on EU as the first kind of pair. EU right now, I would definitely say, let's go on the monthly. I would definitely say we're in no man's land, and the reason for that is I would say this right here is a key level, and we are nowhere really around that area now. If we go into the weekly, it looks like we're kind of bottoming out, so it's probably likely for price to come into this level maybe in the maybe next week. So what we can do is we mark up our first area of interest, 1, because there's been a kind of daily reactions around here, and then a major area of interest 2 will be there. So after that you just set 2 alarms here, and now I'm just waiting. So next one, GU, we kind of already did it, but GU area of interest, do area of interest 1. I'll say that's a major area of interest, and I'm only going to have 1, but typically I'll try to have a couple. Maybe there'd be a 4-hour area of interest, maybe here. And it's very, very important as well, like you will see over area of interest overlap, and that's typically when prices is kind of respecting a daily area of interest, but it also aligns with your 4-hour area of interest, and that's how you know that the zone's kind of like a majorly respected area, and you can feel a lot more confident taking trades. All right, let's go on to AUD CAD weekly. So again, kind of in a big downtrend, coming into monthly, weekly areas of interest. So by me doing this, what I'm doing is, you can't see it, but I'll just do an alert. I'll have an alert placed, and then when I have my alert placed, I'm just kind of waiting for price to kind of give me the confirmations that we kind of have rejected this area. Price will kind of just close below. We get a shifter structure. After you get the shifter structure, then we're kind of looking for entries. But the brief idea is we're kind of looking at these areas, waiting to see how price reacts to these areas, and when you kind of get a good kind of reaction, then that's when I'm starting to look into actually go ahead and place entries into the chart. So right now I would say EU, no man's land. GU is coming into an area of interest, but it's still in kind of no man's land. AUD CAD, I would say it's in an area of interest, and I'll probably be looking to take trades on this next week. GJ, I would say no man's land, because we kind of reacted, we rejected this. I'll say the area of interest will probably be around like 158. Yeah, 158 would be area of interest on GJ, maybe like around there. So when price comes into there, that's when I'll be looking maybe to take buys. AU, again, this is an area of interest, so I'll be looking to go ahead and possibly take continuation sells maybe next week. We got some nice doji candles, despite daily still being bullish. Maybe if you get close on the daily and go below, it could be a good trade. New Zealand CAD. No man's land, but I've had this marked up. I'm probably waiting for it to get to the psych number of 8100, so I actually go ahead and take trades. But by doing this exercise more, I kind of just wanted to rush over it because I want to make this video as short as possible. But by kind of just identifying these types of areas, you just get a lot more confident with picking out areas that are going to yield a higher probability, and that's what trading is really all about. It's kind of giving yourself that edge which can be used over and over again, and also by focusing on these key areas, it will allow you to stop taking riskier trades in no man's land, which can potentially boost your win rate. You'll be more consistent since you're only going to be focusing on like certain key areas. You'll spend less time on the charts because really all you're doing is you're marking up your zones, you're setting alerts, and then you can go continue on with your day when price comes into your multiple areas of interests. You also become more disciplined because you're waiting for the market to come to you instead of actually going ahead and chasing it. But yeah, there's multiple reasons to go ahead and just do and trade this particular way. It can be very, very beneficial, and if used correctly, it can make you nice profit. But that's going to be all for this video. Make sure to like, comment, and subscribe. I would try to do videos every 2 weeks or so, and hopefully you got some gems out of this video.